Should we buy or sell JPMorgan stock? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. And here is a theme that I call too big to fail banks. 21.6-ish% from the 52-week low, but minus 20% away from the 52-week highs, which is the very definition of a bear market. Here is a JP Morgan, global investment bank. It is at the lows, minus 27% away from the highs. I remember not that far back, you had a bunch of people who were like, "Whoa, I'm going to buy banks. Why would you not buy bank stocks? Blah, blah, blah." And of course, those, goofballs, they were like super bullish on banks around here. And now we have seen, a pullback, a very sizable pullback indeed. So the reason, so the millionaires, they will tell you to buy high, but the billionaires with a B, they tell you to buy low and sell high. So that is a very key difference. The 200-week moving average in red, and this is back in 1998. Very relevant, boom, support. Here it is, surgical resistance, support. Here we are fighting to turn it into support, and a big rally ensues. Full war zone around that moving average. So you can see that over a long period, this moving average has been a big deal. This is back in 2015. Not surgical, but definitively we did see a low form close to that moving average. Here it becomes a bit more surgical. Here it almost is literally surgical. Test of that moving average. It was a great time to buy JP Morgan. Then we continue to get into our towards our present time frame. So I think this is the time to whip out the drawing tool. So currently, this is extremely interesting as a support level, because we are above it. But as we have seen, it can become an absolutely ferocious resistance level as well. So if we do get below it, the bears, they will be looking back in time and they will see that back here it was amazing to short the 200-week moving average. But that is another setup. The current setup is bullish. If we look at the week we just had, this is almost the surgical test of that moving average. So I think that this is bullish. It just is. As long as we are above that moving average, it makes sense to look at it to offer support. When we go here to the daily data points, then we are below all the moving averages. What I do find rather unfortunate, potentially a bit dangerous here on the dailies, is that we could have formed a double bottom here. We didn't. We broke below. So there were not enough buyers to form a double bottom. Not a disaster, but double bottoms, they have been relevant in the past. If we see like back here, double bottom, this was even better because the right low is higher than the left, which is even more bullish than a classical double bottom. But basically, double bottoms, they matter. As a matter of fact, the data is right here in front of us. The bears were able to push us below. So I am a bit bullish in terms of this moving average, but what we see on the dailies, it means that it's not a roaring buy, but I do think technically it is a buy. Looking here at the RSI and the PPOs, we are low. We are at lows that has a strong tendency to be bought, except in times of liquidation break. So during the lockdown, we went lower on the weekly RSI. Also back here in 2011, when there was all kinds of financial chaos, especially in the Eurozone and a lot of uncertainties, we did go lower. But more often than not, the current readings forms lows. Looking at the daily data points, A very similar message. You can see that the majority of the times where we test these levels, we usually see mean reversion, meaning we go up. But there have been times where the bears have more fuel left. Looking at accumulation distribution, I don't see that much in terms of buying yet. I would like to see more. The only sort of good news is that even though price made a new low here, vis-a-vis this, we do see that on accumulation distribution, we have a slight bullish divergence. Let's quickly go here to Finvest to look at their lines. There is this potential diagonal trend line here that could benefit the bulls a bit. So the line in the sand is definitively 200 weekly moving average support. I think that all things considered, I will give the technicals. I think I will give the bulls a 4. This looks good, but there is a but. There obviously needs to be an influx of buyers at this key level. So yes, we have an event that the bulls could capitalize, but that will only work if you have more buyers than sellers. It really is that simple. So let's look at the seasonality. So to the right here, over the last 5 years in green, 7 years in blue, 10 years in red, the seasonality is good for JPMorgan. To the left, over the last 5 years, we see that April is a strong month. May is 50-50, usually has a loss. June is weak, however, but July is rather strong. Over the last 10 years, yeah, April, May, June, July, overall it's a okay month. July is, very, very, very strong, but we cannot trade July in April. We just can't. And that is just how the market works. Sometimes, certain months of the year, they are a bit noisy than other months. So obviously, looking at the last 20 years, being a big bull on JPMorgan in July, September, October makes a lot of sense. But that doesn't mean that there's not opportunities in other months. And seasonality data, of course, is just one of many things to look at. By the way, I'm looking at making my own technical indicators when it comes to seasonality and a bunch of stuff. So if you know PineScript, then contact me. One of the things, I want to make a very fantastic indicator when it comes to seasonality data that is way more nuanced and granular than what we have to the right or left here. But I need someone that knows PineScript. Obviously, I could learn PineScript myself, but I have a long list of projects that I am into. It's way beyond finance. It's politics, theology, philosophy, you name it. Anyway, so over the last 20 years, May, June, the coming months are bearish. They are not like roaringly bearish, but they just are. So yeah, a bit of a mixed message. I do think I will give the seasonality to the bulls overall, but given what we saw over the last 20 years, I will reduce the score a bit, so let me give them a 3, which is decent. Then we go into the fundamentals. Sachs has a number 3 hold. C-value score, which is, good. Degrowth, momentum, industry rank top 37%. Yeah, okay. Looking at the market cap, this is a big company, 371 billion US dollars. Very far from being a small cap, but there are pros and cons, of being a big cap. I mean, this is, in the too big to fail banks. So, yeah. And there's a lot of conspiracy theories when it comes to JPMorgan. Some of which are actually not kooky either, so definitively something to look at. And if you just Google, if you go to YouTube, Rumble, and search for it, you will find all kinds of documentaries. But basically, there's reasons to think that JPMorgan they have a lot of power. Dividend 3.17%. looking at the insider activity. So let's see here. Sell, buy, 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 sell, buy, sell, buy, 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 sell. Well, buy. Okay, so looking at okay, there's a lot of transactions here, but looking at 2022, certainly looks like we have more buying than selling overall, at least in terms of the number of transactions. Looking here at consensus estimates, 26 are covering the stock. We do have an average price target that is 25% above the stock price. Highest is 59% above. Lowest is 0.89% below the stock. So I think I will give the fundamentals a bit of a solid score here. Let me give them a 6. Yeah. So good. This is certainly good fundamentals. Could be better, but yeah, 6 is good, of a possible maximum of 9. Yeah, so now next on to relative performance. By the way, here is JPMorgan's website in Norway, actually. Local expertise, global resources, our commitment to Norway. We have a long commitment to serving clients in Norway, opening our first office in 1973. Yeah. JPMorgan Chase will deploy 1.75 billion in philanthropic capital around the world by 2023. I mean, it's like a classical, blurb, like, oh, this is all the things we are doing, good stuff, helping, and all of that. Yeah. Let's just look at the correlations. So we do see that there's long-term an 85% positive relationship between JP Morgan and the S&P 500, 94% with KBE, which is the Bank ETF, then 43% with the 10-year yield. A lot of people have made a huge deal about how important the 10-year yield is for banks. Obviously, there is a positive relationship, but it's not like 99%. You almost get that impression when you hear people talk about it. So I would strongly recommend you use this correlation tool, because a lot of people, in the journalistic finance community, they don't even look at correlations. Many of which, they don't even know what correlations mean. They don't have that background. And then you quickly can have them jump to all kinds of wild conclusions about how critical a certain factor is for a certain stock or a sector. There's a stronger relationship here between JP Morgan and the dollar index at minus 44% negative. Daily data points, 50% with S&P 500, 47% with KBE. Then we do have minus 74% here with the 10-year yield. But we have minus 80% with the dollar index. So the dollar index, in terms of statistical gravity, it is beating the 10-year yield. We do, however, see that both of those two are in the very low end of their correlation. So usually there's more, it is more towards the other side of the correlation spectrum. So that is something to just be aware of, that it could be a bit of a contrarian indicator at the moment. But yeah, certainly what happens to the Bank ETF, yeah, I think I will just look at the Bank ETF, yeah. Because people have made such a big deal about, the 10-year yield and also the dollar index already. So I think that it's more like, I'm adding more value by looking at the Bank ETF. So here it is, the KBE. So let's look a bit bigger. So the thing is that, we have seen a pullback, but there's a but, though. You could make a case that we have potentially pulled down to a place where there could be horizontal support. So that is interesting. Also potentially some support back here. Yeah, if we go here to the daily data points, yeah, we just get a bit more nuanced picture. Maybe there are even some time cycles, so let's see whether they have been reliable or not. Maybe. What about this? Yeah, there's something time cycle-ish here, but not like super clear. Let's look at some of the other indicators. Yeah, so in terms of the RSI on the weeklies and also the PPOs and also here on the dailies, yeah, we are at a low level. We are bouncing from this low end of RSI that has formed some kilos in the past. Okay, now okay, here it is. Yeah. Okay, so this is the relationship between JPMorgan and the Bank ETF. So yeah, we have had a long period of outperformance from JPMorgan, but then that peaked here during the lockdowns, and then we did see JPMorgan underperforms the Bank ETF. The current price action is just a bit sort of messy. I mean, referring to the latest moves. There is the potentiality of us forming a bit of a messy inverse head and shoulders. This could be a shoulder, this could be a head, maybe this is forming a right shoulder. It's if that were to play out, we would expect the right shoulder to mirror the left shoulder in that it could be a bit sharp, sharp. Let's look at the seasonality. Does that corroborate? No. So over the last 5 years here in green, we usually have a bit more weakness towards mid-May. 7 years in blue, also here towards mid-May. Over the last 10 years, overall, we usually see JPMorgan outperform the KBE. Then let's quickly look at the KBE versus the S&P 500. Yeah, overall, it's just been in a downtrend, and there's no like. Yeah, maybe. This is a double bottom. Bottom here and the bottom here. Maybe bottoms up. Possible. Let's look at the seasonality data. What does it support? So over the last 10 years, we tend to see underperformance, also the last 7 years, and also the last 5 years. So it is possible that the KBE is forming a key low, the Bank ETF, at least temporary low. Possible. We have seen that JPMorgan has had a bit of a tendency to outperform the KBE recently. And we also see that the banking ETF, the seasonality vis-a-vis the SPY. So overall, I lean a bit bearish here, but not like extremely bearish. I give it a -2. So we end up with a score here of 2.8. So the data is more supportive of bearish takes. If we fall below the 200 weekly moving average. So that is like the super key important level. But we are currently above it. So the only thing that makes sense is to give the bulls the benefit of the doubt. So yeah, I'm bullish as long as we are above that key level. But to be perfectly clear, if we do fall below it, as we clearly saw in the chart, that usually emboldens the bears a lot. Whatever you do, of course, as always, use stops, be market neutral, and if you are a VIP kind of person, then you can get VIP access here. And it's cheap. I mean, it's certainly like $19 per month. It's nothing.